the first place and I'm zooming past. I'm running the race and I'm faster than them. Yeah, yeah. All of the niggas, they trash to get them. What?
What's going on, guys? Good morning. Good morning, good evening, good afternoon, wherever you are. We'll get started in a minute. Just give me a quick sound check. Quick sound check and we'll be good to go. I got my cup of coffee. Iced coffee, even when the weather changes. Iced black coffee, always. As soon as I get some feedback on the sound, we'll get right into it. I'm done trading for the day. I had the last few New York Opens trading the actual Open. Sometimes trading around 8:30. A lot of the times my trading actually begins before the New York Open. But the last few New York Opens, I've just kind of cleaned up in like the first 10, 15 minutes. And I have a pretty busy schedule lately, so I'm not really pushing anything right now. So we'll throw this stream in, take off trading until maybe later in the day. Although that's never really something I like to do unless I need to. And even then I don't need to. But if I'm trading into the afternoon, then I probably didn't have a good morning. Cool. Good morning. Good morning. Sound is good. All right. Give it another minute. I just shared the link again. As a reminder, so actually I'll go ahead and change the screen. Let me get rid of this music. Get rid of the music. Make some adjustments. Cool. Yeah, so as a reminder, this stream is going to be posted after, and it will be edited. So, edited. It didn't sound right. So it'll be cut. It'll be, there will be captions added and chapters added, and I have a phenomenal team of brothers, actually, that are taking control of my YouTube and just doing a phenomenal job. So shout out to them. I posted their link on my Twitter page. So for anyone who's maybe produces content or does anything where they need any kind of editing, these guys are just... It makes such a big difference, honestly. It makes doing this actually enjoyable. I know that sounds kind of funny because I do it of my own volition anyway. But, you know, it is a pain in the ass to be kind of like solo in that aspect because there is only so much time. And, you know, I have a 9-month-old now. I have a full schedule outside of trading. You know, life has been good. You know, I get to pick and choose what I do with my time, but I definitely don't want to sit after recording a video and chopping it up and doing all of that. I'm just not in the place where I need to do that, I guess, and it's not something that interests me. And that's more. It's honestly more. It's just more. It's more that I'm not interested in doing that. Like I have, like I said, a 9-month-old. I'd much rather spend as much time with her as possible. Anyway, before we get into it, as a reminder, none of what I say in this video is financial advice. This is strictly for entertainment purposes only. They make it a bit more entertaining because they actually, some of their edits they're great, honestly. They're great. But also, as a reminder, this stream is powered by Bybit. So I have been working along with Bybit for a long time now. I've been close with Ben Bybit, remained close with Bybit even when I was working with Phemex. I think it's the best exchange right now. I think it is the best sex right now. Best sex, as in centralized exchange. I think the market has been pretty scared of centralized exchanges. I think that'll change. But they have benefited the most in the last year. If we just look at just rolling 30-day periods, Bybit is the only one that is having significant inflows. And then if you look a little bit further into it, Bybit is the only one that has seen just a steady rate of increase over time of money coming in, assets on board, and new traders signing up. So on top of this, I have to add that, again, it is KYC. So if you are based out of the United States, then it is a no-go. But this is for people who are not based in the United States and are, they are qualified geographically and from a resident standpoint. The link below will give you access to up to a $31,000 bonus. And again, that just depends on how much you're going to deposit. You're not going to sign up for $10 and get $31,000. So it's not like that. But phenomenal exchange. So the link is Trade Bybit. Again, trade where you want to trade. I worked with Phemex. I think Phemex is a phenomenal exchange. The Phemex link is still below. You can still get a bonus. Okay, Phemex is non-KYC. And they also have a token coming out. And like I said, I am going to buy the token, right? I'm going to buy the token. I have a certain amount of the token already. If you've been trading, you've been mining the token. But I think all exchange tokens end up doing well for a period of time. And I think like the average is like the minimum, honestly, is like a 3x. I don't want to say that that is guaranteed. Obviously, that's by no means guaranteed. But I just think that there's something going on with exchange tokens. People know that, one, they're going to pump. And then two, it's kind of like seen as it's a big calling card for the exchange. So I think there's an incentive, honestly, for that sort of flywheel to take place. All right. So shout out to the sponsors. This next thing that I'm going to mention, then we're going to get right to it, is SIGNUP. So SIGNUP is a decentralized options exchange. I'm on the SIGNUP team. So I'm not just sharing a SIGNUP referral link. If you go on SIGNUP's Twitter page, they follow 11 people. I am on the team. Okay. So we are trying to create the best decentralized options exchange. Listen, options, you're not going to get liquidated. You could buy options here. You could sell options. There are strategies set up. Options, obviously, a little bit more complicated if you're just coming from trading futures. But the centralized exchange versus decentralized exchange argument has really taken off in the last year. And having access to a decentralized exchange and not having to worry about, the exchange going bust, I think is clearly a selling point. And then SIGNUP is the best options DEX right now, just hands down, from a volume standpoint, from a participation standpoint, from a market making standpoint. Not some automated market making system where the market can get kind of one-sided in a one-sided market, which we haven't really had yet, but that can be troubling. This is a request for quote. So you're dealing with market makers directly. There will be limit orders coming. There's a whole bunch of changes coming to this. It's the best options DEX right now, and options are only going to take off. And who knows what we're going to bring to market in the next couple months. But I think you should set alerts either way. Okay. All that out of the way. First thing we'll talk about, just to brush back up on it, is the FOMC. Yesterday was FOMC. A pause, right? But I don't think that Powell did a really good job of calming the market if you look at how the market has responded. So it appears that the market has taken the idea of any kind of cuts off the table going into quarter one, quarter two, I think even quarter three next year. I have to double check. They might be completely off the table. But it is clear that more hikes are on the table. So even though we've paused the last two meetings, there are more hikes that are possibly on the table, higher for longer, yada, yada, yada. So today's jobs data was quite important. Now, the market is into a pretty significant level, kind of a level where you would expect people to possibly just get trapped jumping off ship. So from a technical standpoint, I'll take a look at that because it's not like, okay, things are looking really shitty, we're just going to short into the hole. But from a larger trend, interim trend point of view, or intermediate trend, excuse me, I think that we have more downside in equities, or rather specifically equity indices. So I'll be trading the equity index futures. Most of my trading has been the NQ lately, but obviously I trade the ES and crude oil as well. But the ES and the NQ being equity index futures. But anyhow, so yesterday we saw a really nasty response to FOMC. Okay, first move fake out, market snapback. All positioning really in that first couple minutes, and then just have been puking. And so today we had jobs data. Jobs data came in really strong. So, there's more argument for higher for longer. And I think that honestly, we're looking at, from a technical standpoint, I think we're looking at 4,200 in the S&P. We'll take just really quickly. This is the Forex Factory calendar. So for those of you that have asked before, This is a great website to get all your economic releases, all those important dates that you should focus on. Tomorrow is Flash Manufacturing PMI, Services PMI. I have just the red events indicated or filtered. Those are the ones that are going to have the most impact on the market. What I will say is, okay, so yesterday I posted something like people that's, I forgot what exactly I posted. Let's just take a look at it. It was definitely something that ruffled some feathers. Go back down. I said, whoever said don't trade FOMC isn't a trader. You see a lot of people, a lot of like guru types on Twitter, saying things like, oh, no one should be trading the FOMC, stay out of the FOMC. Well, one, they don't really know who they're talking to, right? What you're going to do when you start trading is you're going to find the approach that works for you, right? Whether that is short-term trading, longer term sort of positional trading, swing trading, you're going to find what fits for you. So someone really, some large account might be saying that to everyone that follows them, and they might be talking to a quarter of the people that actually really just like dealing in the lower time frames. They don't like remaining overly exposed to the market. They want to get in and get out. They want to be more of a scalper and have that sort of steady equity curve associated. And they don't want to have longer, positions in the market exposed. They're in and out, right? That the point is they are trading higher frequency, higher time preference, higher frequency, not HFT, but you get the point. So that's based on, a lot of times you're going to fall into what fits your personality. So just one, don't say things like that, blanket statements. No one should be trading the FOMC. A lot of people trade the FOMC. It's not just scalpers. There's options flow traders. There are macro traders that are going to make big positional adjustments possibly based on things that are said in the conference. Like, there's a ton of volatility. That's the point, right? And if you're a trader, you appreciate volatility. There's a lot of people that are positional traders that are more like investors. That it's completely different ballgame once you get down to the lower time frames. When I think of a trader, I think of trading prop. I think of trading I think of trading a lot, right? That's just what it is, for lack of better words. And one of the things that obviously a trader who is a higher frequency trader, not HFT, but just trading more lower time frames, trading more frequently. One of the benefits of that is you get better market feedback, right? You get a larger sample of trades to judge yourself off of more quickly than someone who's trading positional trades, someone who's trading swing trading and might get 5 trades a month. If you're a low time frame trader, I could take 50 to 100 trades a day if I'm trading the NQ. Now, if I'm trading the NQ, it's anywhere from, my positions might be anywhere from 5 seconds to 5 minutes. Okay, so some people might say the 5-minute long trades aren't scalps. I consider it sort of intraday scalping, sort of a mishmash. There's no really objective term. Anyhow, FOMC is actually, for many people, a great event or a great release to trade. So let's take a look at the ES first, because I think it's important to understand where the ES is going, because if we're going to be looking at much lower prices, or I shouldn't say much lower prices, again, this is the ES is the E-mini, but it is based off the S&P 500. So the main area that I want to look towards is this meaty area that we were stuck under for going on over a year. So most of that ceiling between 42 and 43, so 42, 42.50. I think the chances are that we begin to build another base before any kind of next major leg, and that this is the area where I want to get involved. This is for more of a swing and positional standpoint. So if I'm taking any kind of longer term position in the QQQs or the SPY, and this would be, if I was basing it off of this, be looking at the SPY. QQQs would be something if I was looking more at like the NASDAQ. But 4,200, honestly, I think that we're looking at maybe a little period of sideways before then. Again, as I said earlier, this is an area where, so one, when it comes to like FOMC and any kind of economic data, I'm not trying to predict it. I'm not trying to make any bold assumptions or extrapolations based on it. I'm literally just looking at what the market is saying about it. I don't think that you could do any better of a job. I don't think you could do a better job than what the most liquid index in the world is doing, where most of the participants are trading and sort of placing their bets. So I think the best indicator is honestly is the market. So is price. And if you've seen how we've traded the last, we'll say 24 hours, I think it's a pretty good indication that things are going to be cooling off for a bit. And the market is sort of going to redigest again what they've been getting slapped in the face with for some time, which is just a lot of people are talking about cuts and the printer going back on and QE, and it's just the same thing over and over again. So obviously we paused, but we should say that even though we paused, like, rates are still doing the work. So rates are up, right? If you look at the 2-year and the 10-year, there was a glitch earlier in the week or last week, and we've actually managed to just put that move in either way. So there was a data feed error. And if you look at the 10-year and the 2-year right now, I think we've actually just caught up to where that data feed error ended up taking us. Yeah, I don't remember when that was. Was that back here? I don't remember. Either way. Yeah, so rates are doing the actual work of tightening either way. Let's see, where was I? Back on the yes. So the point is, where we sit right now, I wouldn't want to be overly positioned, overly indexed in crypto or risk in general. Because if we're looking at the S&P coming down 200 points, 150 points, I think that puts pressure on, obviously, all risk assets. I don't think that crypto is in this position where, we've had periods of decorrelation and where we've broken free from other markets, more specifically looking at stocks, tech. But I don't think that after the run up that we've had, so crypto is up, what is it, 50% for BTC for the year to date. ETH is slightly less than that. You have Solana up much more. I think that if we see, MicroStrategy coin is up, those equity crypto proxies, I think if we see the ES come down to 4,200, that's going to put a lot of pressure on BTC and ultimately ETH as well. So that's something to keep in mind. Now, where we are right now, though, this is the most important contextual level on the chart between us and that major point, right? So that 42.50 level. This is not an area where I would want to be aggressively, getting short or positioning myself in advance of that. I think that you want to look for some kind of bounce off this level. I think that you could expect more or less us to move sideways maybe into October before we get any kind of further breakdown. So that's something to keep in mind. If you've been short, I was actually short the QQQs. I closed the short out yesterday, and then I reopened it yesterday, probably like a half an hour later, and then close that out this morning. I don't want to be positioned for downside right here. I think there's a better location. I think we're going to end up getting some kind of bounce here. So that's something to consider as far as that putting pressure on BTC. Where BTC is right now, and this is going to be mostly high time frame stuff, to be honest. I mean, trading the low time frames in crypto right now has not been very rewarding unless you're following sort of the scam behavior that's taking place on Binance, and you could trade a lot of those on Bybit as well. But as far as BTC goes, this looks like some kind of corrective bounce off the low, right? So we've had some kind of corrective bounce. This was an area where you didn't want to get aggressively short. First visit back down to this major pivot. I think 25, so just high time frame, and then we'll get down to TPO charts and low time frame stuff. I think 25 and 30 are even, well, not say 30. Actually 30 is probably the best area. 30 and 25. So if we're breaking down through 25 again, I think that we're just looking at filling out sort of more of this really imbalanced move that we had back in March going into April. So that major leg, I don't think that there's any reason why if we came back down, and let me change this ink 1 sec. I think if we're back down below 25, that we're looking at least at 24. That takes us through this low, at least 24. And then probably, I think what the level that I mentioned was around 22.5, 23 before some kind of bounce. I don't think that you would see a situation where if the market takes out 25, that we're looking at just revisiting this low. I think you have to look at this meaty structure back here. I think you have some play within that prior range. So again, right around 23. And these drawings, I'm sorry if they're not as good as some other people on Twitter who have fantastic charts. But just looking at this prior range, extending this forward, where sort of the meatier area was within that range, you could look at that volume profile on the right-hand side of this chart. So that's where that should be where your POC is for that range. We could actually just use a fixed volume profile for that level right there. And it is. So it's right around 23. So that's where we're getting play right now. So you have this prior low, you have this structure right here. So if we're back under 25, I think that you're just looking at reaccepting back within this structure. And then you would look at, again, the first sticky area would be 23. So 23, 250. And yeah, if we continue to have trouble from there, I mean, it's not like there is a whole lot that stands in the way. I don't want to be blindly shorting this region either way. I think that it's doing a decent job of showing strength. There's been some stickiness on Binance there. I think that it's holding up with respect to legacy markets. It's holding up respectfully. I don't want to jinx it though, because a lot of the times legacy will lead and crypto will catch up. And that is the generous lag that I say you have to get short. I could see something like sort of this continuing though, where we continue to chop down. And then depending on where we are with equities, if let's say that this continues into the month of October and all we've gotten is just like continue to chop into this level, and then the ES is at 4,200, then, you know, it's possible that we don't get any kind of further move down and we just have some kind of one more dip buying opportunity, maybe into 24s, below 24s, before another leg up. But as far as I'm concerned, we're still stuck within this range. And, you know, the areas to get involved within the range, you know, they say don't diddle in the middle. But I think that on the short side of things, it's been reasonable to sell something, or to sell BTC. I've done it a couple times myself. I'm still exposed to spot BTC, ETH. I'm still in Rollbit and Ox, unfortunately. I bought the dip, so it's not like we're too far away, but it's looking ugly. So high time frame wise, I guess what would we sum this up as? We're still at support, right? No real reason to get overly bearish, I don't think. I think that, so as I mentioned this quite frequently, actually. I think that we're just kind of following previous cycles, honestly. So I think more or less, I think this was the all-time high. There's a lot of people that talk about this being the all-time high. I think the all-time high is pretty objective. It's the all-time high. If we just look at total without BTC, but with ETH, and then total without either, the all-time high is the all-time highest price. Like, I don't know why people, they insist that this was the all-time high and that this was just FTX. Like, it's an all-time high, right? This was far more of a blow-off than this was, period. And again, if just from a cycle standpoint, if you just look at where we are, 97 bars, 97 weeks, and then we go 97 weeks from this all-time high, just to get a rough idea, right? There is a degree of symmetry between these cycles. And again, I don't think the halving from a structural standpoint, from a supply standpoint, is the aspect of the halving that actually does the work. I think it's just the fact that it is a really strong narrative. So if equities are still showing signs of strength, and we are going into 2024 and BTC is still moving sideways, then yeah, I think the bottom is, I've said multiple times, I think the bottom is in either way. But I think you could still expect a larger range to paint between, we'll say 31, 32, and I would even go so reasonably as down, or go so, excuse me, that was I don't know what that meant. Go so reasonably. I would even go down to 21, 22 and say, hey, we could come back down there. And I wouldn't immediately just say it's lights out. We're coming back down to this low. So to 15 to 16. So more or less expect, or what I'm expecting, is a lot of play between here. Okay. That yearly low, yeah, it stands out. You know, no real probe below the yearly open, but I don't know. Just play it like it is. Play it as it lies right now. Low time frame. So let's go down to the go to Velo first. So maybe some other things worth pointing out. So we just look at the futures market. I've been talking about this for a long time now. I've been talking about this for years, looking at the linear futures contracts, the term structure, seeing whether or not we are in backwardation or contango. And you can still see the market is still trading from an annualized standpoint, looking at 3 month, looking at quarterlies, it's still pretty high. I mean, it's not high, but the best dip buying opportunities are when this is relatively flat. The best dip buying opportunities in the past has been when it's been in backwardation. So when the further out tenors, so the further out contracts on the futures term structure are trading below their current spot price. So we don't have that. It's still trading contango. I think that this is the better play. The quarterlies are the better contracts to trade if you are someone with a longer term view, because you don't have that interest rate component, even though you are sort of paying a premium, depending on when you buy, obviously. But looking at this, and then looking at, if we look at the options market, it's just become, so futures market is still a little bit elevated from a funding standpoint. It's not the case that perps have been like overly negative. There's really no standout trap positioning there. I think you probably have a good amount of sideline positioning, but it doesn't look like, people are really getting short, and it doesn't look anything like that right now, in my opinion. We haven't seen that yet. If we look at 25 delta skew, so in the last week, this has changed. So this is flipped. So if you look at something like Amber Data, I share that. The skew is, the formula is different. So when I say negative skew, and I'm looking at Amber Data, what I mean is that the puts are trading more expensively than the calls. So this is inverted right here. So what this chart is showing you, even though these skews are listed as negative, is that the calls are trading more expensive than the puts. So there's just still optimism, right? Especially in those further out contracts. There usually always is, but you could think about things on the horizon that would make that makes sense to be optimistic about. The ETF, right? The halving. But again, I just look at this as sort of a barometer of sentiment. Short term is going to move with the wind, right? So the market moves on the low time frames. You're going to see this shorter term skew move a lot. 25 delta skew, just as a reminder, this is the 25 delta put and call. So this right here is the 25 delta call minus the 25 delta put. So it's the implied volatility in that case. And you're looking at which one is trading more rich compared to the other. So if calls are trading more expensively, right, we're saying that the market is optimistic. If puts are trading more expensively, we're saying that the market is it's defensive. It's buying insurance. It's betting on downside, or at least it's protecting itself in advance of that, or anticipation of that. Let's get to Sierra chart. Take a look at BTC. So something notable, at least worth pointing out with this rollover. So we had multiple days of overlap back here. So going back to the 14th, value. So I call this sort of like the Russian doll setup. We have those, one doll inside of the other doll inside of the other doll. It's not an inside day structure, but value is perfectly aligned. So in this case, you're going to want to make sure that you have some kind of composite for this. So this is the value area composite. We re-accepted back within it. You can see this is kind of where we bounced off of, re-accepted back within it, traded back down to the lows. So you're trading back through a prior range. I think more specifically, though, something that stands out, a lot of the times you just keep this on your radar. You do have, it looks like we have poor highs up here. So poor highs, yeah, we do. So we have no real excess at this high. So poor high, decent, but didn't really do anything to clean these up. Like this took out this high, but again, left a poor high. So no major rejection, no major blow off. Instead, it's kind of just like a momentum roll. Again, we didn't run into anything that really caused any kind of major snapback. So that's something that I keep on my radar, right? As an area where you would either look for a stop run or an area just to retarget. Let's say if the market starts trading, and this is a pretty decent composite right here. Let's say that the market starts trading back, and this is a trade that I would take, back above 27. So here's today's profile. So if we ended up trading back within this composite, again, keeping in mind, all right, so risk as a whole getting an ass kicking off of the FOMC, off of jobs data today, S&P, the NQ, both at, well, the S&P more specifically into a major contextual level, so an area where you would expect a bounce. If we're looking at some kind of relief, at least in the short term, and BTC is back above today's POC, back within this 2-day composite. So that 2-day composite is between 27 and 27.3. This is not a big trade, honestly, guys. There's not a lot of major trades right now. But if we're back above 27, so if we kind of recover this entire day, trade back above the high volume node, put all of this activity below us at this point, which arguably you've a decent amount of probably positioning and expecting further downside. If we're trading back above 27, a lot of times you would look from, your composite value area low right here of the composite up to the high. So composite value area high as your target. But I think it's reasonable to expect you would have a lot more follow through if you had some kind of recovery like this in the short term. And then I would say, all right, so this is a case where I would expect the follow through to clean these highs up. So good amount of buying up here. Poor highs though, like I said, no real excess. Excess is, again, if you've taken the course, a single line of TPO columns, right? So excess is where you've run into either sellers or buyers, depending on what side of the TPO it's on. But if we retrade it back 27, remain bid, I will just target these highs. So 27,450, 27,5. And again, just to give you an idea of what excess is, excess is, I didn't load enough days on this, but excess is back here. So excess is that portion of the chart right there. I could actually just go to, we don't really have any do we have any excess on this? Yeah, we do. We have excess on, it's a buying tail or a selling tail, right? So before this got built down here, that was excess, just one line of TPOs. So excess, right? It's the idea you ran into either buyers or sellers and the market has responded abruptly versus the market getting to spend a lot of time in an area, which is never really a good sign. So market is spending a good amount of time down here. We don't have any excess after this kind of move down in the ES. You definitely would want to see some excess, right? So I definitely would want to see some kind of tail put in that maybe we trade back above versus what we're getting right now in the ES, which is we're building value down at this low and we haven't had any kind of swipe of that yet. We're able to hug this region. Now you can imagine 4,400 is a pretty significant level. It's a major round number, but it's definitely not, I would say confidently, this is not the low right here, right? So 4,400 ends up getting swiped and maybe we recover it and then we put in some kind of excess at that low. Either way, BTC, I think in the short term has that set up to the upside, right? So again, today's POC, right? You're all above today's value at that point. You're back within this comp value area, and this is the low, this is the high. It's a 2-day structure. You have excess up here. Terrible writing. Okay, so that would be your target. As far as any kind of play to the downside, I mean, it's reasonable to expect if the market does not hold this low that we start just trading lower through prior values. So back around 26, I think is a decent target. So if you don't see any kind of bid, if we don't get any kind of major bid where we are right now, so we'll just put on BTC's 1-hour chart. Let's expand all these actually. So bigger picture, you get a little bit wider, zoomed out, you get a better idea of kind of where we sit. So this is going back into August. So this is almost a month-long range. It's not, we had this major move up, but you could see where price spent most of the time. So most of the time in this region. So it makes sense that on the way back down, that area is going to be sticky. And then zooming out, I mean, honestly, this is the value area composite for this entire structure. So better yet, actually for downside plays, so we will, let's put on a, actually adjust. One second. There you go. There's your value area for that entire structure. So you can see we're kind of flirting around the value area high. I mean, we're within it again. But I guess my point is, let's go back to Sierra. I think it's more like this pivot right here. So yeah, it's basically, I think it's exactly where we are. That is the level. This is, you know, as silly as it sounds, where we are is exactly where we need to hold. In the sense that if we lose 26, so if we lose this region right here, and I don't know why we would, I can't imagine we would just lose it the way we were losing it right now. Like if we were continuing to just drift lower, I think we're going to get some kind of little pop right here, a little bounce. But if we're back below 26, I think you could just target this range low, right? This sticky point at the bottom. Precision of language probably is important. The sticky point at the bottom is right around 25 to 25. Just the idea is that this is the sort of carve out. It makes sense where we're finding support right now, but if we fall back in there, it's going to be a pretty accommodating structure for us to grind back through. And again, as you know, as we approach 25.2, if that was the case, this is not a level where I would continuously hold through if I was short. If I was short some kind of setup, let's say below 26, so if we got some kind of setup below 26, market attempts to reclaim, instead reoffered, we're seeing just a lack of aggressiveness by buyers, things looking slippery. If we end up tagging 25.2, 25, then I'll reevaluate, because I don't want to get overly aggressive unless we're through 25. Low time frame wise, so just more zoomed in intraday action. It's not like anything really stands out. We got the squeeze earlier that just led to a lot of crowding. So this particular portion of the move right here, so grinding up, going into Monday over the weekend, you just saw CVD was pretty much down only. Prices still able to drift up and trapping shorts. We ended up getting a squeeze higher, but I think more importantly, just something that always worth respecting, and I think you kind of should apply it sort of, how would I say it, like default assumption when you have a lot of buying coming in and prices moving up and a ton of open interest behind it. Default assumption is that those longs are going to get wiped. And, you know, we're in a period of the market right now where there's no new money coming in. I hate to say PVP, but it is, right? There's only so much money in this market, and positioning is getting hunted. So when you have a significant, we'll say a significant increase in positioning, so let's get rid of, so this is where you had your large amount of liquidations, but let me get rid of these real quick so you can see, focus on this. So here's your open interest. So here's that spike up. All right, big move up, very significant amount of open interest coming into the market. You know, a lot of people thought that this was front running something. It's almost never the case, right? It's almost never the case that you're going to see something like that. So what ends up happening is this kind of position gets into the market. We're into, you know, an area where it was pretty sticky prior, area we had just rejected off of, and, you know, that positioning gets unwound. I ended up shorting that. I shared that position. So I ended up shorting that. And then the same thing happens after, right? Looks like a recovery, and oh, if this was a major rejection, should have led to continuation. This must be bullish then. And you just see the same. It's like people getting crowded at the lows, getting crowded towards the highs, and there's no real change in this market right now. And I don't think we're gonna have one. I don't think we're gonna have one in the near term. I think that like it's just positioning all. That's all it is right now, right? We're gonna get crowded at the lows, crowded at the highs. Just trade the range. I don't think the ETF's getting approved anytime soon. I would be very surprised if the ETF was approved before the end of 2023. I'd be very surprised. October 13th, I think, is the next date. I don't think it's getting approved, right? So just keep that in mind. As far as just open interest in general, though, bigger picture, I mean, after this wipe, we settled down quite a lot, but it's still relatively elevated compared to this little range that we're in. But I mean, it came off a lot, but it's not like we've seen, I don't think it's easy to say one side is really overly committed here. I think we're having these sort of micro wipes, which are significant, but I want to say open interest is relatively flat when you just look at the levels over the last few months. Back prior, below May, below June, obviously below all of this. So that was quite a significant purge. Let's take a look at ETH. Real quick, ETH BTC. I don't think anyone's been talking about this chart in a long time. I think the area, people have been talking about alt-Cs in the last week, which is absolutely ridiculous. The area where I would probably want to be positioned in alts is revisiting these lows. So going back to, this is going all the way back to June 2021, and then we have May 2022, June 2022. I think revisiting these lows is where I would start. I would, in anticipation of that, I'd want to start getting positioned in ETH and possibly some alts, depending on where the market is, right? If the market is in a free fall, it's a different story. If the market is beginning to base out, it all depends on where everything is. But this is the only area where I would really consider that. I don't want to be buying alts just because they've moved down. I think it's expected that they move down. A majority of them are just absolute garbage. Solana, as I said many times before, and I'll repeat it again, I think Solana is just going to follow a similar path to ETH. I think it has further down to go and further more sideways ahead of itself before any kind of break above this 27, sort of sticky point between 27 and 30 region. You could tell that is our major overhead resistance. And if anything, I could see us coming back down, swiping this low, and then beginning to sort of grind up. And that's into 2024. So I see people getting bullish on Solana just because it moved up in the last day. It was leading, but it's just higher beta. I think that this has further sideways to go, and honestly, probably comes back down to these lows around 14, 15. As far as ETH, USDT, I mean, let's zoom out. How does this look on the monthly? I'd say not so good. Monthly, weekly, not so good right now. Below that low, retesting that monthly level, back, sort of creeping back within a much larger range. I get hesitant about getting aggressive though, right? I mean, looking at this, accepting back and within here, you're possibly looking at least the midpoint of that range, right? But these kind of grindy moves down, I think that it's easy for us to spike and then have one big move that undoes all this. But I think just from a bigger picture view, this again, similar to BTC, I think we're going to retest probably 13, 14 if BTC retests 22, 24 in the next month or so, 2 months even. To get bullish on ETH, I would need to see us back above 17 convincingly. ETH is weaker than BTC by far. It has been year to date. It's weaker right now. If you just look at sort of the highs compared to what BTC has done, It's almost like BTC has been trading higher beta to ETH. It has been, right? But for me to get bullish convincingly, we'd need to be back above 17. I think that's pretty clean, right? Major rejection there, sort of grinding right now below this prior low. Different story than BTC, like I said. So this would need to be back above 17 convincingly, and then I could see something where you end up cleaning up the structure towards 18. But until then, I don't see a reason to be buying this ETH dip right here. I think a structure like this should have done its job, right? So take this low out, strong move, sort of V move off of that. And now for us to re-accept back within there, I think is just an ugly look. Now it's not uncommon for us to get something like that though. So to get sort of this little higher low develop here. And in which case, you know, if we look at this sort of on a 4-hour chart, and I'm looking at high time frames right now because I'm not scalping or intraday trading really any cryptos for the most part. Again, I think just I'm happy in spot. When I get good short opportunities, I take them. Sec. Sort of retesting this naked POC from the 12th. So this is a sort of a week-long composite. If I put a weekly profile on there, that's your 3-month. It's a little faint right now, so let me get rid of this drawing, this box. So here is your, whoops. Why is that doing that? That's annoying. So prior week's POC, this week's value area low, value area high is between 1620 and 1657. So, I mean, this was the area where we were grinding into before this moved down. If you're back above 1620, you have all of this behind us at that point. We're back within this weekly composite. Yeah, I could see some kind of, you know, similar to BTC short-term play, some kind of move between 1620 to 1657. But I'm not knife catching anything right now, so I'm not betting on strength from where we sit. I think it's easy for us to possibly get another spike down, and then you want to see something that offers a really significant response back. So something engulfing almost, sort of like what we had initially for BTC. So kind of similar to that structure, where most of the work is complete, you know, to the downside is completely undone in one day. But I don't know. I'm not going to bet on that to come out of nowhere because there's no signs of it right now. If you look at ETH's TPO chart, ETH has a good amount of excess into this gap. So we tag those single prints right there, going back to, again, like I said, the 12th. We're at the volume POC for that day, so we had a naked volume POC. So I ended up taking out all of these lows. This structure is kind of ugly right now. What you would want to see develop, honestly, is us develop more between 1564 and 1600. You have a ledge up there, so you have that anomaly. So if we could do that, move sideways, and then start trading back above there. This is easier than looking at that last profile, actually, to just combine these to give you an idea of the composite. It's loose up there, but it's a week-long range, so. Yeah. What'd I say, 1620? you go. So it's similar to BTC, right? In the sense that the long opportunity that I would look for, because I don't care about playing around down here. I only want to take right now in crypto the high probability trades, or what I would consider high probability. And I would consider a situation where you have the market ranging like this, puking nastily, and then trading back within this. It just, a lot of times you're going to get that slingshot back up through the highs. And similar as, more importantly, something I left out, in the case when you have no kind of clear rejection at the highs so far, you just have a rollover. So we don't have any excess at the highs for ETH either. So no excess, no major kickback. You have a decent. It's not a poor high, but there is an anomaly up there. There is like a little bit of a ledge. So we have no major excess at the highs yet, no major kickback. The 3 days prior, we've just kind of rolled lower, so lower high, lower high, lower high. So in the event that if we're trading back above 1620, today's POC, we've had a swipe lower again. If the ES and the NQ are looking at some kind of bounce here, ES at 44 last time I checked. I don't know where it is right now. And we're back within this composite. I think you get overthrow to the upside. So I honestly, though, when I think about it now, I think it's less likely with ETH because ETH has just been showing weakness compared to BTC. So for ETH, I would probably say 1620. If we're in above 1620 rebid, I would look just probably to this comp value area high around 1643. Right? Because, I mean, we're back within value prior day before breakdown. So 1620 to 1636. I think you probably get some kind of attempt back towards yesterday's high. But in keeping with weakness, or rather in keeping with the last few days and the last couple months for ETH, honestly, just relative weakness, I wouldn't expect a surprise the same way, for BETH. Whoa. Getting a little funny with the words. A surprise the same way with BTC, where we were saying, okay, we have no excess at the highs. We're going to look at some kind of further throw towards 27.5 instead of just targeting, from point A to point B, the value area low to value area high of that composite. Does this all make sense? I could see us just continuing to grind down, though. Don't take that drawing seriously. That was just a lazy. As I said, though, with the ES, so the ES does not have a good low in the making right now. So I think we're going to get some kind of pukey move possibly to take out that low, put in some kind of excess. Oh, we have a little bit of excess at the low right now. So remember earlier, so it happened during the stream. So earlier I just said 44 was not the low for today, and instead, or rather, I should say, we ended up making a move lower during the stream. So my point was, before we came back to this, that low was like this, and we were just kind of huddling up towards the low. What you want to do is see, what you're rarely going to do is see that after market puts down this kind of move to the downside with this kind of intensity off the last 2 days, you're not going to have a low left like that. You're going to have some kind of swipe of that reclaim, ideally, that leaves you with a profile that has some kind of buying tail, or in this case, a stop run of that low, or excess, whatever you want to call it. It basically implies the same thing. So ideally, this should be holding 44, though, because if we don't hold 44, just to show you where we are, bigger picture. So that goes back to August. I mean, that's fair game for a low to develop right down here. Again, for something that possibly into October pops up a little bit before, I think ultimately, again, continues down. getting a little redundant with my words during the stream. Excuse me. I'm like paying attention to myself as I'm talking. I think I'm losing my voice. Yesterday I was, I got some kind of nasty feeling in the back of my voice. I don't think it's because I'm sick though. I think it's because I was just making weird noises at my daughter yesterday to make her laugh. Like at the top of my lungs though. Yeah, I'll take a look at Link. So Link is interesting because if you were to just look at Link in isolation, this would look like the, cleanest sort of most textbook accumulation bottom, right? I mean, it is just that dude who was I was going back and forth with. I thought he deleted his entire page before. The bottom is just so clean right here. I mean, it looks like that until you realize like everything else did really well in that period, right? So you have $5 to $9.50 as sort of the ceiling going back to May 2022. That looks great until you realize that like ETH and BTC and everything performed really well in that time period. Like this has not broken out. So I don't know. I mean, it's tough to say. All I do know from this is if we are above 850, then it's like one of the cleanest setups I think you could take. Right? Because we ended up having multiple months stuck within this range between 850 and $5, had the probe at a low. If we're doing something like this now, we're above 850, then yeah, I think you could target much higher prices for Link, and we're looking at much higher, meaning like $12, and then we'll judge from there whether or not we have higher to go. I think that honestly, if you are doing that with Link, because of the relative weakness it's shown compared to everything, that it probably means everything is going up as well anyway. So for example, like if I put on BTC on this chart, it makes a bit more sense. Actually, let me get rid of that. We'll use the just relative performance. So here is from that low, and then we'll put on BTC, and you'll see what I'm talking about. I mean, it's not really doing much more than BTC. Off of the lows, more importantly. So, excuse me, I meant to do year to date. So, grossly underperforming, something that should really underperform a lot of other things. So, something to consider. But again, like I said, at least it's clean. I'm going to do one more. So, we'll look at RUNE real quick, and then I'll probably wrap it up. Looking at that high, I don't know why that was lower. Oh, probably because it was this weekly pivot back here. Either way. Could RUNE be a valid short on a bearish retest into 4-hour FG? Yeah, I mean, it's possible you have some kind of backside retest taking place right here. So backside retest of this structure. It all depends on where the rest of the market is headed right now, though, because this very well could be your breakout before putting in another attempt towards that $2 high. And I think $2 is honestly a good level to sell, though. Sort of your round number. But if you just look at sort of what range this market has been in this year, and this is more than a year. but it's pretty, I mean, it's pretty clean that it's stuck within a higher time frame range. So I don't know if even like short term, maybe you have a short term play to the upside. I think it looks like a better short over the next couple weeks, more than likely, if everything else is going to mark down a little bit more as well. Just because it is in such a nice area to find risk above this high. In the sense that if we're above 2 and the market is accepting above 2, you're probably going to get run over briefly at least. Although if we have a situation where we're above all this, market spikes up, let's say it puts in some kind of excess towards 220, and then now we're trading back within this range and we're having trouble, then I think you look at trading back down into this range and targeting much lower. Again, it's just the idea that this is such an important contextual level for RUNE. I mean, it's not that important, right? I mean, it's just an alt. But it's a nice area to find your risk, right? Major contextual level, 2023 highs, right? If we flush that level, which we already did, but if we're back up there now, if we flush it again and we're trading back underneath and we're having trouble at this point now, then I think you want to look at least 145. Or it'd be something more along the lines of if we broke back above, traded back, and had trouble above that $2 level, at least you would look at this low and then this high being tested. So 165, 180, or whatever that is. Yeah, right around 180. So, Nifty 50. I don't know anything about the Nifty 50. Meaning I just don't trade it. I mean, if I was looking at this from a technical standpoint and that alone, I'd say this is 24 hours away from being, less than 24 hours away from being closed out and being a weekly swing failure. You know, and a lot of times what that means is the market is going to range more, but looking at this target down here makes sense. So take out that high, close back within, and even from just using local price action, right there you had that. Took out the high, closed back within, targeting those lows again. So you're probably looking at something like this, right? Ideally. So at least from a short standpoint, you're looking at that low. All right, guys, probably going to wrap it up. Thank you for tuning in. Didn't take any trades this stream. I have everything closed down. I had a really great opening 10 minutes. And I know I scheduled the stream, so I just considered today like a done day. Again, maybe I'll take some trades later, but I don't see a reason why. I think I covered everything I wanted to cover. BNB still tapping at that cliff. I don't know. Who knows what happens if we break below 200. It's not looking good though, right? Does anything stand out locally in BTC from, I think we already checked that on Sierra. Open interest elevated into this move off the low. People buying the dip. Let's see, did I miss anything? This is something I'd keep an eye on. Rolled coin. Just because you have this like little pivot taking place. So low, high, high, transition right here. So it's possible that this is doing this kind of stair step grind up before a pop up. But I haven't looked enough into it. Everything's just getting pretty hammered though. And if you've been overly excited about the market, just remember where we are. If you look at everything besides BTC and ETH, and you could do this minus stablecoins, it's the same story. We're not doing anything. So we need a catalyst. We need something to inspire retail confidence again. It's going to take some time. So maybe an ETF. Otherwise, you're looking at the halving narrative, and things could change. But at least it's a time when we know we need to be paying attention. All right, guys, that'll be it, though. Thank you guys for tuning in. Please hit the like button if you didn't already. Subscribe, all that good stuff. And the cut, chopped, organized, and captioned version of this will be out hopefully by the end of the day, if not tomorrow. Until next time, enjoy the rest of your evening. Out.